Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Expleo Solutions, a giant in making, a very good stock that has more than doubled in the last 2-3 years but can continue to perform well. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Expleo Solutions, a small request that can you support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company, Expleo Solutions was established in 1993 and formerly it was XQS India, and one of the renowned companies, XQS India. It designs and develops application softwares. The company offers a digital business support and consulting services for automotives, banking, insurance, transportation, logistics, and energy sectors. And there's a decent dividend yield in here. Majorly have clients in India, and the market cap of the company has risen to around 1200 crores from a mere 300-400 crores a few years back. In terms of financials, these are Q4 numbers. So these are Q4 FY22 numbers was the last year. So 113 crores of sales, up by around 41%, which is pretty good. Profit was up by 80% to around 18 crores versus 10 crores. It's a zero debt company, high promoter but low institutional holding, a very good ROE at around 29%. Margins at 21% is also pretty strong. In terms of the performance, it has been a big outperformer in 2021, and we saw the stock triple from a market cap of around 600 crores all the way to 2000 crores in virtually no time, within 18 months, and then decline from the highs as the sector has faced the heat, and the whole sector has not done that well, and so Expleo have also fallen from the highs by around 30%, 30-40%. Have been delivering high margins. The results have started to look very good. The results were up and down, but now it looks really good with the Q4 numbers that have come out. Profits have consistently increased, and the valuations are very reasonable. At around 2000, it might not be that reasonable, but now at around 20 times earnings, look very attractive at these levels. So why I believe it can be 3x in the next few years is that the industry is being served should do well as India opens up. Basically, these companies that they serve to, or industries that they serve to, are more opening up trades. So you take into account banking, insurance, you take into account transportation, automobile sector per se has not done well for 5 years, and they are now coming back out of it. So look, we are looking at automobile sector to do well from 2023 onwards, so things should look much better. Demand for digitization and automation will only increase, and there are a number of businesses that require that. So SQS will keep on getting the business. Yes, there would be issues with the kind of recessionary phase we are going through in India and abroad, but things should get better in 1 or 2 quarters. So this is basically a trade or investment for 3 to 5 years, and I'm not talking 1 year or 2 year in here. Huge opportunity once sales increase, as top line growth has been meager. So normally top line growth has come out to be around 10-12%. This time around it has been pretty good at around 40%, 30-40%. So I think things are looking up. We have to see how much the effect of the recession would be on SQS. Otherwise, the company is set to do pretty well, and it only trades at around two times sales, probably FY24 sales or so. In terms of technical, charts look a bit weak. So the stock has fallen from the top by around 40%, 40-45%. But the short-term support lies around 1000, is a very big support. So these are good levels to enter. Deeper supports are around 700, but majorly you have to look at 990,000. I think those are very strong support levels. It may just consolidate. It has been declining for a while, may end up consolidating from September, October onwards. So probably one more month of fall may be possible from 1160, 1170 all the way to say 1000 or so. But then things should look up. So you can start accumulating here. The major breakout is expected about 1350. Somebody who wants to buy for short term can do it from 1350 levels. May not see immediate surge as sector has been under pressure. So I believe at least for the next 2-3 months we will see consolidation or further decline, but things should look up from the latter half of this year, and 2023 should be good. So what needs to be done? In my opinion, valuations are reasonable to accumulate from these levels, but keep some money to buy at around 1050, 1040 or odd levels. I think 990 should be a very good support. Build positions over time over the next 3-4 months or so, and buy on these levels on major declines, bad markets. It can be a consistent performer from 23 onwards, and I think by 2025 and 2026 the valuations should be something else than what it is currently trading at. So you have to be patient in IT to make money and have less than 10% exposure into such stocks. So this was my video on Expleo Solutions. Please like and subscribe my channel, hit the bell icon so you can get my videos right away when I post it, and kindly support me on Patreon. Thanks a lot for watching.